on liability and risk management for entrepreneurs. We hope you all had a restful evening and are ready for another day of insightful discussions and valuable learning. So, absolutely, it was an incredible journey exploring the topic for the last 2 days. We had a talk with approximately 10 different panelists from different organizations, different countries, and different industry niches. So, let's continue our discussion for today and hope everybody here enjoys it. So, first speaker for today is none other than Dr. Swati Sharma, who is an associate professor at Jindal Global Business School and holds a PhD from IIM Lucknow, a UGC Junior Research Fellowship awardee and gold medalist. Dr. Sharma specializes in finance along with a strong research and teaching focus on risk management, financial markets, and sustainability. Dr. Sharma has authored several publications in these areas and peer reviews for reputed journals. Her ongoing work explores entrepreneurial risk, liability frameworks, and the role of AI and ML in mitigating financial exposure, making her a valuable contributor to the discourse on liability and risk in entrepreneurship. Next up, we have none other than Mr. Deepak Singh, who is the founder and CEO of Growth Capital based in Dubai, founder of DS Business Consulting, that is DSBC, and the founder of Strategic Exports with co-founder roles in 5 other ventures. With over 20 years of global experience across semiconductors, health tech, and venture capital, Deepak ji has helped 30 plus startup founders raise over 40 million in funding. He specializes in scaling early stage startups in clean energy, deep tech, and impact sectors. His mission is to generate 1 million jobs in India by empowering entrepreneurs and connecting global capital to local innovation. He speaks on fundraising, startup growth, strategic exports, healthcare, and building investor ready businesses. Moving ahead, we also have Mr. Vinay Kumar, who serves as the Pro Vice Chancellor of SRM University, wherein he plays as a vital role in leading academic initiatives across multiple faculties. He is widely recognized for driving curriculum innovation and implementing strategic academic management practices that enhance institutional effectiveness. Vinayji's leadership style blends visionary thinking with a deep commitment to lifelong learning, institutional development, and creating academically rigorous, industry relevant learning environments. His mission is to ensure students are not just well prepared for today's professional challenges, but also empowered to shape the future of their industries. Next up, we have none other than Ms. Hilda Mutungi, who is an auditor with a BSc in Computer Science from Makerere University and a MBA from ISAMI. She has over 15 years of experience in auditing and risk management as the senior auditor at Airtel Africa Group in East Africa. Hilda is charged with overseeing the East African region with regards to East Africa Annual Audit Plan, quality of audit processes, and performing specialized audits and reviews. Next up, we have Ms. Parnil Singh, who is a management consultant with a total 6 years of experience and extensive experience in due diligence, digital transformation, cost optimization, and implementing strategic initiatives across multiple industries like industrial goods, NBFCs, IT consulting, and others. Her education from IIT and IIM blend technical intelligence along with business acumen to solve tough problems for large conglomerates. Currently, Panilji is a senior consultant for Boston Consulting Group based in US. Outside work, I she enjoys scuba diving, swimming, reading books, and catching up on good Netflix shows. Last but not the least, we welcome Mr. Saurav Mehta, who is the Vice President of IT with over a decade of experience in the fields of IT governance, network infrastructure, and cybersecurity at United Commercial Bank PLC based in Bangladesh. Currently serving as the Vice President in the IT Governance Department of UCB PLC, Bangladesh. Saurav has been instrumental in developing and maintaining IT frameworks, ensuring regulatory compliances, managing IT audits, and leading risk management initiatives. His prior engagements with Sumit Communications Limited, Ericsson Bangladesh Limited, and Banglalian Vimax Limited have equipped him with robust expertise in telecom, infrastructure, network, operations, and client support as well. A graduate in Electronics and Communications Engineering from Khulna University, Bangladesh, Mr. Mitra holds multiple certifications in cyber security and network security, including credentials from Fortinet, ICSI, and Coursera. He has led and contributed to key projects such as UCB's ISO 27001 implementation, PCI DSS compliance, and cybersecurity awareness campaigns across the globe. So we are grateful for all of your presence, panelists, and eagerly anticipate your valuable insights and contributions to today's conference. We would also like to inform all of you here, including attendees, that the HR team will be conducting polls in the chat box throughout the session. We encourage active participation from all of you. So now, before we commence our discussion for today, just a small request to attendees again. I would appreciate it if you can keep your webcams on throughout the session and ensure that you get certified and we have no pain. Okay? Since you're becoming young entrepreneurs now, I think it's time you start acting responsibly too. So further, moving ahead, I would like to request Dr. Shwati Sharma to commence her speech and share her insights with all of us.
Thank you so much. Namaskar, everyone. It's an absolute pleasure to be here today among such an inspiring mix of audience I have with also. And the room is full of idea that maybe hopefully day one. Why not why later, but start with the day one. So when we think about a startup, we usually focus on innovation and the growth most of the time. But today I would like to bring your attention to something that is not all the time underestimated. Yeah, but people don't oftenly they take into consideration. That is the risk management. Before I'll take you through the bits and pieces of the risk management, I would like to share an anecdote that I have gone through a few years back. I was a part. I was not. I was mentoring a young startup that was building at the time, and they had a very good idea. They had a AI powered financial tool. They had everything that was going well for them. They had a solid project. They had a very promising market, and even some early traction also. But what they haven't planned, it was a regulatory change that came within a day. So overnight, their model became non-compliant. So they didn't have any backup plan, no risk assessment. And within a week, the team was scrambling. Investors started pulling back, and they had to pivot under pressure and with very limited time and resource. So what I understand, because I was watching them very closely, and I was also part of mentor team there, that it was not the problem with the technology or the team. It was not that they have failed, but it was the lack of the risk lens. They didn't have that. They were not prepared about it. So risk management isn't about being fearful, or being scared of it, but it is about being future ready. It's like I used to say that we used to be more vigilant when we talk about the startup. It is about building confidence in our decision, protecting our mission, and ensuring that every startup doesn't just launch, but it also lasts as much as possible. So when I said that I will be talking about the building risk resilience for the startup, there are few things that I will be mentioning today, like which kind of risk one may think about mitigating or try to minimize. So we all know that all the startup operate in very dynamic environment that is filled with the uncertainty. They need to look out for the funding from there, where they will get the fund. If there is any compliance with the regulatory authority, there could be tech failure or regulatory changes. So these are not just only threat. I will not say threat. These are not only risks that exist. So with the help of the risk management, one can actually look for the smart growth. This is how one may actually last forever. So I will be talking about the business resilience, investor confidence, and long-term sustainability. These three are very much important part for any startup to sustain in the long term. So there are not only whatever risk I am going to talk about. These are not the exclusive classification of the risk, but I am taking a general idea of what kind of risk a startup may actually go through. So first, we may have the strategic risk. What is the strategic risk? It's like, suppose you are starting a startup or venture at very poor timing, and you didn't think about it. So you need to see when you should actually start. It is right time to start or not. Sometimes you will find that a person was at the right time at the right place. That's what I'm trying to tell you here, that poor timing should be avoided as much as possible. So one has to look before you start. There could be some other kind of risk, like operational risk. Suppose you have a team gap. You have a very good idea, but execution is not being as much good as the idea it was. There could be supply issue or any kind of logistical issue that you may face when you start a journey. There could be compliance risk like tax, data privacy, and ESG nowadays. Again, there are lots of terms that we use when we do this introspection, that there is pestle analysis, SWOT analysis. So there is also technological risk like IP protection, cyber security, even the financial risk is always there. There are again further classification to that. I'm not going into very deep. And lastly, I will say that very much important is the market risk. You need to understand what kind of customer you have, how they behave, and how they could behave in the future. So, changing customer need and actually looking at the macro trend is very much important here. So how we can actually just whatever risk I have just told you, again, if these are not exclusive, there are other risks also. So how what we can do to mitigate them or try to minimize. So one can start with the risk mapping. So what is the risk mapping thing? First you start which kind of risk you are looking at. Suppose a business, not all the business is going to look at the technological risk and the market risk. So first decide what category, what kind of risk one may actually go through. On that basis one may start doing the risk mapping. So every risk mapping have how, what are the frequency that it may happen or it may not happen. If it will happen, what kind of loss you may suffer or what kind of loss in the revenue you may have. So again it seems very calculative, but it is not that much difficult to actually understand. So one may have a probability matrix for every kind of risk, when it happened, how it happened, and what will happen if it is happening. So one may also give some kind of indicator. Suppose I am saying, for example, that if my sale is going less than 10% of the last previous month, it is an indicator for me. I'm not saying take my word 10%. It could be anything that you have to decide, and you have to not decide actually. You have to actually come with that number. That this is the indicator that I am actually looking for here. So any kind of cash burn, nowadays I used to see that startup used to have negative cash instead of having positive cash. They are having negative cash. They used to say that we don't want to sit on a pile of unproductive assets. Cash is not important for us. We want to have a productive asset for us. So even negative cash after a time could be a burden, or I would say warning indicator for anyone. So what you will do when you are looking, you have classified, you have decided the what could be the risk indicator, what you are going to do the next. Whenever you are starting startup, please put everything in your hand and then look at the time of the launch of your product. You need to bring a team also who can handle those kind of risks. Suppose I'm saying you have a regulatory or the legal risk, so you need to have a team who will actually look for that. So bringing a good team is also very much important, and the market launch plan should be very. Uh, for that thing, one may also look at the peer. Which kind of, suppose you are starting again a financial AI generated power tool for some customer. So there are already some tool which are in the market, so you can actually compare the data. If you don't have a data, try to find a product which is look like you, which is like looks like you, maybe not exactly, but yeah, some part of it. So you need to see, you can do the SWOT analysis, that is the strength, weakening, opportunity, threat, and with that you put that risk matrix, and you will have a at least some picture in your hand that this may happen actually. I'm not talking to actually minimize the systematic risk, but I'm trying to minimize the unsystematic risk, because suppose some natural disaster happen that is not in your hand. But even startup has looking at that also. What happened if I am a pro, I'm in an area which are natural disaster prone geographical area. So even that can be taken into consideration. So what will happen if you have this thing in your hand? So there are definitely, if you're risk ready, there will be some benefit. Like you have a sustainable option of sustainable growth. In long term, you will last. You will have a risk resilience. So suppose something bad happen, so you know how to recover. So there will be faster recovery option from this kind of stock. Again, you already have an investor, so investor will have trust in you, and your partner will favor, because you have a prepared team in your hand. You will try to actually avoid the costly mistake and any other this kind of issue. So what I am trying to tell you here, that risk management isn't a brake, it is actually steering wheel that will take you to the growth or the stage you want to actually bring your startup to that point. So the what this risk management all is talking about, that risk management should not be like a kind of a checklist that okay, I have done this, and then you are moving on and you are not looking that risk is still there, because if you are in a business, risk will be there. It is a part and parcel of your business operation. So with a growth mindset, please plan for the uncertainty in advance and grow smarter, not just faster. So risk management is in the risk management, it is like that you will start from day one. You will map the risk from the day one. Take real time data. Try to take as much real time data as possible. Don't just go for the projection that has happened for other. Maybe it will not work for you. As I said, look at the peers and look at the company which are like you. If you are not getting that, then try to generate the data. If you have something in your hand, that will be better instead of having nothing in hand. And also the risk timing in this strategic decision is very much important. When you should expand, when you should not expand, when you should go for public offering, when you should not go for something like that. So for all if and but, one should be prepared, and that is all about the risk management. So as I said earlier that again startup is very much flourishing nowadays, and it is giving employment, generating employment for the other also. It's a very good thing to have a such kind of a startup. So a starter should prepare for the risk, not only for the starting or the launching, but to last their business as much as possible. So that's it from my side. I'm open for questions if anyone has it.
So, firstly, thank you for the informative speech and the insights, Swatiji. Although I had a small question, technically being a professor and a researcher, you might have explored multiple cases of financial risk, right?
Yes, yes.
And as far as I know, and as far as I have read the news, I think ye aakhri week mein we had two startups which already committed a lot of fraud and vanished into thin air, especially
Yes.
that mobility guys, the Sikh brothers. So how would you, like to advise the young entrepreneurs who are watching us here, like one advice on why and why, like, being ethical in the industry is very important in terms of financial risks especially.
See, when you start a startup, I think your idea should be that I'm not going to cheat anyone. My idea is to build something that is good for the world. Like I said in the start of this talk, that we are people who will actually do something good and make this world better. So this idea should you should have in your mind. If your whole idea is to get money from someone, and then you are, it means it should not be a zero sum game that you are taking money, then you are being, you are having growth. It's like you will create revenue, you will create growth for other also, not for only not only for yourself. So it should be, I think, integrity, the honesty should be the part of the when you are starting a startup. Your mindset should be your mind should not be that I am going to exploit, or going to churn money out of from someone else. Instead, I am going to create for others also, and as well as for myself also. That should be the motto. Again, that is very personal remark. Startup can start with some other mindset also.
Sure, thank you for the response. I would like to request the audience to put forth their questions if any. You can simply raise your hand and ask questions. Any questions from the audience? Harshal, Neha, none? Okay. Well, that was it then, Dr. Swati. It was quite a
Thank
good
you.
speech, and thanks for the last insight, because even I was wondering from the last 2 weeks कि इतने startups अगर investors की आंखों में धूल झोंक के निकल रहे हैं, तो honest वालों की तो फिर हो ही गया फिर उनका काम. So please do share your email ID in the chat box in
Sure,
case our
sure.
audience has any queries and would like to connect with you personally. They can just reach out to you directly.
Thank you so much again.
Sure. Thank you for the amazing speech. Now, moving ahead, I would like to request and invite Mr. Deepak Singh to commence his speech and share his insights with all of us. Although I believe Deepak ji will be able to enlighten us more on that question I asked as an investor himself.
Anyways, thanks, SK, and Dr. Swati ma'am has, concluded everything in detail. Now I'm really wondering what would I discuss. So, madam ne to pura, on the this side she has already, taken it through. So, so on my side, I started my entrepreneurial journey when, there were no there were no startup investments happening. there was nothing startup those days. When I started when I was in college, तब कोई funding startup नहीं था. Then as it is, I took up a job. I took up a job in private equity. Had an opportunity to work in India and the Middle East. And then again in 2016, I was introduced to startup fundraising. While I was into private equity, we were doing majority private equity deals. So that's when I had an exposure to start helping startups, fundraise, scale, and grow. That day, fast forward to today, I have 14 personal portfolio companies where I have invested on my own D2C, fintech, uh, you name the company, deep tech. I have invested. Plus, I have helped more than 30 plus companies fundraise and scale. Now, I also manage a closely held family fund wherein we are growth investors and we invest across companies which are on the growth stage. Uh, Now that we're talking about risk, the two risks what we see is mainly uh, the sector, industry, and scalability, and exit. Will I get an exit for whatever I have invested? Again, that's a risk. I mean, I've been backed by a lot of LPs, and when we invest, we have to look about their funds and their capital. So we do two things: risk evaluation and risk mitigation. Risk evaluation, we have a set of parameters for the startup based on the founder himself. What's the skin in the game? Has he himself taken any risk, or is just banking on investors' money कि यार कोई पैसा लगाएगा उसके बाद मैं धंधा करूंगा? That those kind of investors, those kind of founders I see on a daily basis. Plus, how to mitigate the risk. We have certain risk markers with us, and based on that, we take a calculated risk. So Swati ma'am has already covered most of the topics. I would not go back there. I would like to keep it more interactive. If you have any questions, I'll be very happy to take. Otherwise, I think that's all from my side.
Yeah, the question in the chat box is actually a poll. You can continue, Deepak.
Yeah, so like I said, ma'am has covered everything, all on risk. I don't have anything other to say. So I would be only happy to take questions if any. Uh, Otherwise, no questions. And anything anyone wants to talk about investments, how do we invest, what do we look in? Those kind of things. If any questions are there, I'll be really happy to take it ahead.
Sure. So Deepak, I had a personal question. Like, kind of even I have been into real estate for the last 8 years, and apart from that, even in consulting, I've just joined out 4 years back. SK A&G was started 4 years back. So my question was like, we see a lot of entrepreneurs asking for funding, right? And there are a lot of guidelines and a lot of theory matter on what should be presented and what shouldn't be presented. So according to you, what is that one important thing which matters for every investor, and which is the one most important thing that the investor looks at before making the decision of a yes or no in the
Wonderful,
initial 5 minutes of hearing the pitch?
wonderful question. A startup always approaches me saying that, sir, we are raising 200 million, we are raising 2 crores, we are raising 5 crores. Would you be a part of our journey? I'm not interested in what you're raising. I'm interested in what you're building. What have you done? I mean, what is the problem you have solved? Is your problem, are the paying clients really paying you for whatever you're building? So first, whenever you approach an investor, approach with a, very humble introduction of yours and start with what you're building, what is the problem you're solving. Investors are not interested to say, "Yeah, I'm raising $8 million. Who cares what you're raising?" Yeah. So be humble, be very polite, start with your introduction, give what you're trying to build, what is the problem you're addressing, and then the discussion, flows on. So the simple is, your first investor should be your paying clients. If you're saying I'm pre-seed, then you're pre of everything. Pre-seed doesn't mean, you are pre of everything. आप एक just pitch deck लेके आओगे and then say someone is investing on my and then you call me a pre-seed. That's not going to happen, at least in the current ecosystem and or the future ecosystem. The current and the future is for the real builders who are going to build it with their own skin in the game, with their own personal capital to kickstart and scale to a certain level and then go and ask for investment. Though the days of selling dreams have gone. I would have say sapne bechne ke din gaye. You can't sell dreams anymore. So that's what I would say.
Thank you. I guess we have a question for you, Deepak ji, in the chat box from Mr. Harshpreet Randhawa. It is,
Mhm.
what advice would you want to give to students who want to take up investing and also manage their personal finances?
I would say Harshdeep, who wants to take up investing. What kind of investing? Is he talking about investing his own money somewhere, or he's trying to talking about his personal finances? Because that question is very confusing to me. But what I understand is he is looking to raise funds. So Harshdeep, I'll be very honest. And I'm as blunt as possible. Investments, okay, as in securities and all. So I'm not a security and stock exchange guy, so I cannot guide you on that. So, but if you're looking to invest into something at the moment, try to invest into balanced mutual funds, and that's what I would say as of now.
And we have a question from Ms. Neha Gidwani to Deepak ji.
Well, if a startup, if a startup is gone, then it's gone, ma'am. The money is gone. Simple. But yes, now some funds have started taking personal guarantees कि यार मेरा पैसा डुबा दोगे तो आपको पैसा देना पड़ेगा. So personal guarantees are becoming a new norm now. Going further, if you don't have a personal guarantee, then there's an the bank gives you debt. Bank doesn't give you equity. Bank doesn't care. You're doing good. You whatever you're doing, they need their money back as per their EMIs.
So I guess that was all questions for Deepak ji today. Okay. We have another one, I guess. Okay.
Sir, you can get into private equity. There are a lot of private equity companies which offer internships. You can try having internships there, and that's how you can get into private equity. In my case, I got into private equity through campus recruitment.
Thank you for the wonderful speech, Deepak ji, and thank you for being
Thank
responsive
you,
to our questions too.
Thanks a lot.
I would like to request you to just share your email in the chat box, so that if any of our entrepreneurs here or our kids here would like to reach out to you personally, they can just drop you a mail.
Yes, sir, I will
Thank
do
you.
that. Thanks.
Sure. So now moving ahead, I would like to request Mr. Vinay Kumar to commence his speech and share his insights with all of us.
Thanks, SK. Thank you for giving me the opportunity. It's a pleasure to join you all here. Uh, I didn't know that this is a 3 days type of a conference, but yeah, I mean, I'm here now. So basically, any business, when you have risks, the risks will have implications on liability. So it's a simple this thing. When I was at IIM Lucknow, I used to teach this course called Entrepreneurial Finance for a very long time. Of course, I taught both the courses. I used to teach a course called Financial Derivatives and Risk Management, and then I used to teach this course called Entrepreneurial Finance. Also, I was involved in the incubation that we had at Noida campus at that point in time. In fact, the initial stages, I was also one of the directors that, we when we started that company, the Section 8 company, and then the entrepreneurial ecosystem back at AM Lucknow is quite vibrant. So I think I nearly taught some of these courses for about more than 2 decades, nearly 20, 25 years. And see, one of the things that I have, I have to tell you is, I was advising one of the, ventures, which is it started by an Indian entrepreneur, but located in Poland. It was like it was like a very vibrant thing. It was like a Facebook of for the patients, people who had healthcare issues, and it was like an open forum where people share their experience of dealing with cancer, dealing with a lot of things and medication, alternate solutions, their experience going through a certain this thing. So it was about that actually. And so the product was in place in the sense that, it was built, and there was also some initial traction and this that. Then suddenly they hit a roadblock where actually what happened was, there is in the European Union, actually, you can't share patient information on public forums, even if it is voluntarily shared, because it's a sort of a legal risk that they did not foresee, and it simply hit them like a bolt. And then what do you do? So this is one of the, when you look at any venture, especially startup, startups are actually not like full businesses. In fact, you need to discover a revenue model. You need to discover how do you put together a problem solution framework into place that works for the customers. So there are a whole lot of issues that actually entrepreneurial team typically deals with, right? But everything is a risk in a startup. So what happens is, one of the key things that you should understand is, how do you deal with such kind of issues, right? Because these things can completely stall the business, right? And then what? So the point is, how fluid is your venture is going to determine whether you will be in the marketplace or not. So I'll tell you, immediately pivoting. So this business actually pivoted and then started becoming a sort of an analytics-based business for healthcare providers. Okay, and so it's not an open forum, but now it's a closed forum, and it still is a conversation kind of a platform. And now there is AI and this that. But the point is, it's a much more vibrant format, which is actually going to be used by medical practitioners. So that kind of a pivoting actually saved the venture. Now, essentially, whenever we talk about, look at any venture, what type of risk do you have? You have sometimes you have risks related to employees. You don't pay them. There is some kind of a harassment and things like that. You have defective products. Then you have intellectual property violations. Then you have negligence. This is one of those negligence in the sense that you didn't foresee, and breach of contract. Okay. Now, breach of contract can happen within founders also. Okay. And so that's why when you start contemplating about the business, that itself is an issue. That itself is a risk management issue for a startup. Who should be your founders? Okay. Then what if you're working with a wrong founder or a wrong co-founder and things like that, that becomes a sort of a big issue, and then that the venture falls flat. essentially, you have to look at the investor. When investors are actually investing in a business, what do they do? They, let's say there are two businesses, business A and business B. Business A has a cutting edge AI based product solution, okay, maybe in the healthcare. And business B also has a cutting edge AI based healthcare solution. Both of them have 80% common business problem solution proposition. Both of them. Now, this is healthcare is an in thing, and every investor would want to actually invest. AI is an in thing, so some of the check boxes are already, ticked, and you make the pitch, okay, and excellent pitches. Both 5-minute pitches were excellent. Then what? How will the investor basically say that both of these two ventures are compelling? And let's say if I am supposed to choose one from this, okay, it could be both of them. The venture investor could choose both of them. But I'm saying, just for the illustration purpose, let's say only one should be selected from among this. Can you tell me what should be that one factor which basically should be differentiated? I mean, think about it. The essential this thing is, you may have a very grand vision, and you may be working on a cutting edge pain points, a cutting edge solution to address a set of pain points. But then, if you are unable to actually execute it, execution risk is the fundamental differentiator. So, in other words, both these teams, I'd like to see a team that, if you have a lesser product, but then your ability to actually put this venture together and then actually make sure that you will implement it, I would rather choose that business rather than a business which has grand ideas, but the team is weak as far as execution is concerned. So that's why what happens is, if you start out with a sort of a team that is not sticking together, the venture is going to actually fall apart. Okay, and then it is going to give you a sort of a contractual obligations, legal mess. Okay, and you got to get out of that. So it's going to be a huge problem. So my point is, you keep the end in mind. Okay, what is that you want to create? From a liability this thing perspective, I can say that any venture to be sustainable would want to actually comply with all rules. So there should not be any regulatory issue later. So I'll make sure that this is the end goal. Then what else? I'll make sure that all legal compliances related issues are addressed in my venture, canvas. Then you can say enhanced brand reputation. Now, for startups, brand reputation is everything actually. Legal compliance is, I would put brand reputation as a much important goal to pursue than legal compliance, because you can always catch up with it. But there are remedies and this that sometimes insurance itself is going to remedy some of the problem, because errors are going to happen in a business, right? Especially in a startup. So now any product related failures, that means they're fundamental product proposition problems that you haven't anticipated and the product is not working, that is going to run you into rough weather very, very soon. I'll give you an example. There is a European brand cycle. I don't remember. It's a electric cycle, which looks awesome. The design concept and the design framework looks very, very, very appealing, and it has a lot of things that actually does. The cycle does for you. And essentially, the product was a failure because the product didn't work in the way the entrepreneurial team envisioned. So there were some people, it was actually sort of, It was in a crowd funding website. People bought some of these cycles and used it, and somehow could not basically get the satisfaction. The venture immediately flopped because the product itself is, I mean, the claims of the product versus how the product really worked didn't match. Now the moment this happens, you don't have a future. You just in start see, the point is, let's say if a fairness cream doesn't work and somebody goes to the court, and then I'll say, there is one line in on the product that I wrote, that this is like, this is going to be based on your general health condition, this that, and it may not fully solve the expectations, and this that, some disclaimer is already there, so therefore I'm out of it. Now the point is, for large businesses, they can always have remedies later, but for the brand reputation related things, they can address. For instance, now Air India crash has happened. Immediately, Rabina Tandon was employed to say that Air India is a great experience. Now I'll say, to recuperate the brand image, I'll have a lot of these celebrities talking about Air India experience and things like that. And then probably I'll recover a little later. Maybe after 6 months, my brand gets some kind of a recovery. And the Air India has a lot of money to do that. Startup doesn't have that much money to actually do that. So therefore, the moment you have anticipated product failures, it's gone. The brand is gone. So the point is, so I largely look at my two major points. Hey, how do you start the business? And then how do you build a reputation? Now, if these two parameters are addressed, much of your valuation parameters are done. Okay, you may have negative profits, you may have negative EBITDA, and things like that. If you will have a growth story, you will have interesting investors community who would want to actually encourage you, because the execution risk is addressed, and much of your product related risks are not there. Then what? You will be able to build the brand. I think that, so fundamentally look at the end goals in perspective. That means envisioning is the most important thing for the entrepreneurial team. Okay, how do you want to do this is very, very important. Is more than 50% of your problem. Okay, I think if there are questions, I'll answer. I think that's it for me.
Thank you for the amazing speech, Vinayji. Just a short question. Considering that you are on an administrative position in a university, my question would be the best addressed to you in this panel. So, kind of being a vice chancellor of a university, you might have observed a lot of time that 90% of the students being admitted in any course, be it UG or PG level or even PhD level, are mostly interested into placements or employments, right? And that is a pattern that has been going back from the 1900s to till today. And even just like we had in 1900s and the dot-com boom wala 2000 ka era, just 2 3 guys like Sanjeev Bikhchandani coming out of every batch, we still today have the very same ratio of people coming out for entrepreneurship, a very 1 or 2 wala ratio. So how do you think we can eradicate this? Because government is trying from 2014, right? Make in India, develop India, build India, CGTMSE scheme, startup India. सबको 10 लाख से लेके 10 करोड़ तक का डेप्ट इक्विटी दे ही रहे हैं, डेप्ट फंडिंग. स्टार्टअप इंडिया तो ग्रांट्स भी दे रहा है 10 करोड़ तक के. फिर भी the situation and the percentage is the same in every university. So how can we change it? How?
See, I'll tell you, one of the things is it's got to do with the way we are raised. See, in India, one of the major things is we are our family is very strong. So the family influence is huge as you grow.
Obviously.
And then the second thing that you have to understand is government cannot solve entrepreneurship problem. Okay, schemes are not going to solve the problem. Okay, The entrepreneurial deal flow should if there is enough entrepreneurial deal flow, then the people will use the schemes, people will, and the deal flow itself is a problem, right? So in other words, so for instance, let's say in the school, people should be asked, I mean, the school student should be asked, hey, can you fix the puncture, or fix can you prepare some food at your place and come and sell in a community? Can you do that? And can you earn a few rupees? Is it possible? Can you come up with an idea? Can you come up with a t-shirt design that sells? Okay. So when you start doing that, even within the family, if you say, hey, why don't you do these things? Hey, you seem to draw good images. Why don't you put them on some website and charge some money and make some money? Okay, so that kind of an orientation should be there in the families itself. There are now some families, people who are actually trying to basically nudge children to do their own things. Okay, do your own thing, fall and get up. Get up also. When you get up, also you should get up on your own. I'm not going to be there. So this kind of the inculcation is needed in the schools. In the schools, people should be taught how do you build a sort of a prototype. Okay, and then use Legos to build a sort of a tractor or something. Okay, imagination, and also train them on selling skills. What happens is there is a certain type of an appreciation they will develop for products and the ability to sell. If these two components are there when they come to the university, for instance, I can tell you at SRM, we have a very vibrant ecosystem for entrepreneurship. It's a huge establishment. There are over some 48, 50 ventures currently working, and there are more than 150 ventures graduated, and some of them are doing really well. So I'm saying the ecosystem is going to benefit if the students who are coming into the system have a certain perspective. And at college level, you can't fix that, but we are trying to do that. Okay. Now, for instance, I'm very closely associated with the entrepreneurship ecosystem back at SRM, and I can tell you that we have a minors program. I mean, we're developing a minors program. It's going to be implemented soon, where this appreciation gets developed so that they can actually sort of experiment with less cost.
Interesting.
But it's a long way. I can definitely say that it's a long way.
Sure. And that's the point actually. Okay, I'll come back to this discussion after the conference one-on-one on a call. Might have some good proposals for you. So even we are like brand partners to 17 universities pan India, including Symbiosis International University. We basically work on these areas only. So we can work with SRM as well, I guess.
Fantastic.
Anyway, thank you for your speech and this answer, because ये मेरे दिमाग में काफी टाइम से खटक रहा था that government has done whatever has to be done, no? लोग कहते हैं कैपिटल इज द बिगेस्ट प्रॉब्लम, तो गवर्नमेंट ने ग्रांट भी दिया है, उसने डेब्ट इक्विटी फंडिंग भी दी है, और प्राइवेट इक्विटी देने के लिए तो हजारों पीवीसीज हैं ही, बट स्टिल
इतने स्कीम्स है, क्वालिटी नहीं है, फिर भी वो डील फ्लो में ज्यादा क्वालिटी नहीं है, बिकॉज यही सेम फ्रेमवर्क है, बैंकर्स है, जो बैंकर्स का लॉजिक के हिसाब से ही ये लोन डिसबर्समेंट्स होता है, और उनका लॉजिक दे डोंट अंडरस्टैंड स्टार्टअप इकोसिस्टम. तो ये सब मैंने merely policies are not going to completely sort of change.
Exactly. IBs में even I have observed they mostly go for the growth stage, startup seed stage वाले, ideation वाले पीछे छूट जाते हैं.
तो वही तो है ना. तो अब देखिए, ऐसा है, एक फिलोसॉफिकल फ्रेमवर्क है कि अगर हम बहुत ज्यादा डेमोक्रेटिक सोशलिज्म टाइप ऑफ थिंग करेंगे, माने सारा का सारा चीज गवर्नमेंट ही करेगा, तो फिर दिक्कत. तो
बात वही है,
थोड़ा क्या है ना, सोशल डेमोक्रेसी तरफ जाना चाहिए, और you should make sure that entrepreneurs are supposed to be solving the problem, and we are going towards that, but थोड़ा टाइम लगेगा.
Everything is a game of patience after it.
Absolutely.
Sure. Thank you for your speech, and it was quite amazing talking to you. Please do share your email address in the chat box for any follow-up questions or discussions from our
Sure,
members.
sure.
Sure. I'll drop a mail to you later on after the conference, or my team will
Will,
connect. We can
yeah.
discuss a lot. Sure. Thank you. Now, moving ahead, I would like to invite Ms. Hilda Murungi, Lead Auditor of Airtel Group Africa, to commence her speech and share her insights with all of us.
Thank you. Thank you for the opportunity. I hope you can hear me. I'm excited to be part of this conference. Glad about the opportunity. I've already learned a lot from the previous speakers, and pretty much they've covered a lot of what I wanted to cover, but I'll still go through it maybe a bit quicker, and I won't go too much into the detail. I have worked for established organizations. I worked for startups as well. And I can say that most of my experience with regards to actual risk management was acquired when I was in a startup, because we had to set systems in place. We had pretty much were setting up the risk departments, fraud, audit. So it gave me a lot of practical experience with regards to risk management. You find that when you're working in an established organization, you find systems and processes already in place. So pretty much what you're doing is maintaining what has already been there, maybe looking at emerging risks within the external environment, within the internal environment. But with regards to a startup, you're pretty much down in the trenches with everyone with business, because usually what happens is you find that audit and risk are pretty much removed from the business. But in a startup, everyone will be in the trenches. And today my discussion will mainly major around my experience in the startups. So what I thought I'd talk about today is on legal liability with regards to contractual employment and regulatory and compliance liability, as well as people risk, fraud risk, and technology risk. I won't go too much into technology risk because I know one of the speakers is an IT governance professional who will most likely cover that. So I thought I would talk about contractual liability for startups because in my experience with a startup, we encountered a lot of problems with regards to the contracts that we entered into with third parties. So you'll find that as a startup, you're being taken advantage of either by your staff as well as the third parties. So if you do not have good controls in place, you're not able to do good due diligence on the provider that you're trying to get in contract with, you find that you'll incur a number of costs and losses. And as the previous speakers have said, you can't afford to be firefighting as a startup. You don't have a lot of capital or money to go around in firefighting. You pretty much want to push your product, but not to waste a lot of resources in firefighting. So with regards to contractual liability, I think what one needs to look out for before you enter into a contract is, as a startup or as a business owner, you need to get legal advice to ensure that you're adequately protected with regards to the contractual terms that are being presented to you. You need to do adequate due diligence. I think one of the problems we encountered was providers who were inflating their prices, providers who were offering goods and services that they were not ideally supposed to be providing. So you need to do adequate due diligence with regards to market pricing. What are the prices being offered in the market? So you'll find that the same provider has tripled your pricing, but they're giving another entity that has adequate due diligence procedures a lower price than yours. So we encountered a lot of that. Then you need to ensure that the other party is who they say they are with regards to the goods and services they offer. We had issues with providers who, I think due to collusion with staff, collusion between staff and third parties, you find that probably the company does not even exist. the services that they're offering you. They do not primarily offer those services. And so if you're to go back and investigate or you want to follow up, you pretty much cannot find the organization. You pretty much cannot find the entity where they say their location was. So you need to do a lot of due diligence to determine that the provider is who they say they are, and the services they offer are what they are registered to offer. Then you also need to ensure compliance with you need to ensure that your contract complies with all applicable laws and regulations. Things like data privacy have become very critical in terms of the data privacy obligations of the third party as well as your own obligations. And a lot of this is because we have the data privacy officers and they're holding a lot of organizations accountable for their obligations. So you need to ensure that the person you're getting in contract with complies with the regulations that govern your relationship. Then you need to ensure that you maintain a copy of the contract. This might sound very, very academic, but you'll be surprised that you'll have relationships with suppliers and you can't find the contract. So you can't enforce what you cannot find. So you need to keep track of that. Now, I needed to talk about contracts because there's some, especially for startups, you find that you'll have some relationships where you've not documented the contract. So something like maybe it's an implied contract, or it's a handshake contract, or it's a gentleman's agreement. Now, when you go into such a relationship, it is very difficult to enforce. The burden of proof most likely will lie on you who's trying to convince the other party of their obligations. You're not able to enforce obligations. There are no terms and conditions. There's no contract tenure. How do you exit the relationship? So you find that enforcing what would be ideal or primary contractual terms, you cannot enforce them where you do not have a contract, even if it's implied and enforceable. There are certain things you cannot enforce where it is not documented, where it is not written. So critical clauses like returns, what do you do in terms of a return, the right to audit, if that is required, the tenure, these are all difficult to enforce where it's a gentleman's agreement or a handshake contract. So you need to ensure as a startup to protect yourself and to protect the resources of your investors that whatever relationship you go into, the third party is documented and that you obtained adequate legal advice on how protected you are with regards to that relationship. So I also thought we'd look at employers' liability. Now, as an entrepreneur, when you hire employees, you definitely become subject to employers' liability. And what are the common grounds for employers' liability? We have the workplace injuries. So you need to ensure that your environment adheres to health and safety regulations, and you have those stipulated in place and staff are trained on the same. Then negligent hiring and supervision, where you're employing unqualified employees or dangerous employees, where you've not done critical criminal checks have not been done. You find that you're just employing anyone. Harassment and discrimination has been addressed by the previous speakers, as well as wrongful termination. I think what's mainly, what I've seen is mainly prevalent within startups is wrongful termination. So you find that some startups have the quick to hire, quick to fire policy. And what quick to hire will do is that you will not have adequate time to put in place onboarding controls. And when you're on board an employee, you've not done adequate background checks. You've not done, and the background checks could be criminal background checks, previous employee or employer references that would ideally speak into if the employee has had any because you're quick to hire, you don't have time to do all those background checks. And then when they get into your company or your organization, they become a problem to you. So you need to look into having strong onboarding controls. quick to fire will also get you into a lot of trouble, because that means you're not going to go through the adequate procedures that are stipulated by the employment laws and regulations with regards to firing an employee. So things like, you might not have things like a disciplinary committee or disciplinary measures that will likely get you into trouble being sued by the employee. Imagine you fired someone because they've committed fraud, and now you have to compensate them because you wrongfully dismissed them without going through the adequate processes and procedures. So you need to have adequate processes in place. Much as you're quick to launch, you want to launch quickly, you want to push your product quickly, you need to ensure that you have adequate onboarding controls that protect you, to ensure you employ the right resources, the right skills. And also, if you need to let go of someone, you ensure that you go through the right processes and procedures to let that person go. You might also be liable with regards to vicarious liability, which means that you are responsible for your employees' actions. So much as the individual might commit the action, you might become liable if that action was carried out within their scope of employment. So that also gets us back to ensuring that you're employing the right people, and that you're doing the adequate training for employees to ensure that they understand their responsibilities and that everything is communicated to them to be able to be accountable. Then we have legal compliance, which ideally is adherence to labor laws with regards to employees, as well as occupational health and safety regulations. I think I've spoken about that. With regards to risk mitigation, you need to ensure that you have clear employment contracts and policies. You need to ensure that your employees are well trained in all the processes, all the procedures. If it's ethics, you need to ensure that they're trained in what their responsibilities are with regards to ethics, what their responsibilities are with regards to their work, and what their responsibilities are with regards to even the regulations that govern you, because you need to have employees that understand at the end of the day, for you to comply to regulations, it is the employees that you have that enforce that compliance. They're ideally the ones who are doing the execution. So they need to be adequately trained. So if you're into fintech, that means you're adequately training them with their responsibilities with regards to regulations like AML, that's anti-money laundering. So you need to ensure that end to end, the employees are trained so that you're able to enforce accountability. Then you need to institute proper disciplinary measures, as well as maintain a disciplinary committee whose roles and regulations, whose roles and responsibilities are adequately communicated, adequately documented, and that all staff are trained with regards to their responsibilities with regards to that. Now, with regards to compliance, I'm just going to talk about what you need, the key considerations for compliance to regulations. You need to understand the regulations that govern your product and service to ensure compliance. Non-compliance will expose you to penalties and reputational damage. I think the previous speaker spoke a lot about reputational damage. Now, there are some fields that cannot afford reputational damage, such as medical fields, payment systems, because these heavily rely on trust. So if your reputation is damaged, it is hard to recover from it, and you're spending a lot of investor resources in recovering from that event. Then compliance with key reporting obligations and deadlines. You need to ensure that your reports are accurate and that you adhere to the reporting deadlines. Now, what happens here is you might quickly put up a report, share it with the regulator, but what I know about regulators is that they will always verify. And they'll always go into the field to determine if you're really complying. So they'll hold you liable, they'll hold you accountable for reports that you've submitted to them that are not accurate, that do not adequately depict the picture on the ground within your organization. Then I think key to that is also to maintain an open relationship with your regulator. That means that you communicate early, there's a cordial relationship, you're able to approach them while you're encountering challenges, where you're encountering difficulties, and this pretty much helps you to negotiate with the regulator. The regulators are not robots, they're human beings. And if you have a good relationship with your regulator, you'll be able to negotiate your obligations, be it reporting. If you're running late with a report, you could easily communicate in time, tell them why you're running late, what challenges you're encountering, ask them maybe for an extension if you're not meeting a certain obligation. So you need to maintain an open relationship with your regulator. Even in events of penalties, if they're issuing you a penalty, you can negotiate the penalty. But if you have a closed relationship, then it's going to be very difficult for you to operate in a heavily regulated environment. You need to maintain a compliance tracker. This was also mentioned, which pretty much just allows you to have an overview of where you're non-compliant. And this also proves to the regulator that you're putting in the work to achieve compliance. Like I said, the regulator is not a robot. Once they come into your environment to review what you're doing, and they find that you have a tracker that's already maintaining your areas of non-compliance, what you're doing about them, most likely you'll not be issued a penalty, or you'll not be treated harshly. There'll be some sort of leniency in how they deal with you. So you need to maintain a tracker that shows you, provides a picture of where you are with regards to compliance. Then I think also make sure your taxes are in order, because you do not want to incur tax penalties. You need to have like a tax consultant. If you don't have those skills, get someone to do it for you to ensure that your taxes are in order, because you don't want to spend a lot of money paying tax penalties. Now, with regards to risk management, I wanted to look at mainly the people risk, which I've covered a bit of. And here we have key person dependency, which is over-reliance on resources such as founders for decision making. Then we have lack of adequate checks on senior management in the absence of a board. This is very, very important. So you find that senior management, or the founder is making all the decisions. They're overlooking certain controls because they want to launch so fast. They're overlooking certain key factors with regards to operating the business, but a board will keep you in check, especially if you have independent directors within that board. They'll keep you in check. Most founders do not want to have a board in place because you feel you're a one-man show, but having a board in place ensures that there's adequate oversight. And the board also provides various experiences from their.
Yeah, excuse me, Hilda. Please just wrap it up in 2 minutes. We have two more speakers on the panel left, so a small time constraint.
Okay, fine. So very key to maintain a board, to have a board in place. I think finally I'll speak on fraud. Fraud is very prevalent within startups because you're launching very fast, you're employing people that you've not done background checks for. So you find that there will be a lot of fraud, and most individuals with a fraud background target startups because they know that you do not have controls in place. They know how to cheat the system. So if you do not do adequate onboarding controls, you're going to find that you're exposed to fraud. So what you need to consider is institute key fraud processes and policies. Make sure that your staff and employees are trained on those processes and policies. They know what their obligations are. Maintain key controls. Now there are system controls or key industry controls that you might ignore, but that will be exploited. Those weaknesses will be exploited in your environment and cause you a lot of loss through maybe failed system controls. So also institute monitoring controls. Monitor whatever everyone is doing. So there's monitoring that can be done by individuals and there's monitoring that can be done by systems. So all your key critical activities should be monitored. Key critical stuff should be monitored. Have alerts, automated alerts for critical activities. Do not rely on trust. I think that will be my closing remark. Thank you so much. It was a pleasure speaking to you.
Thank you a lot, Hilda. However, a small question before you can just wrap it up. As auditors, we have always heard of the Enron scandal and how those numbers were increased to show profits and attract investors, right? Although the SOX audit guidelines were introduced post the Enron scandal, still, even today, multiple startups are using the same method to inflate their books of records and attract investors. What's your take on that?
Yes, and that's true. And that's why it is critical to have a board in place. Because on that board, you're most likely going to have a board audit and risk committee with with an individual that has experience in accounting and finance who will be able to keep you in check. And that's why it's also important to have an independent director on the board who does not who is independent of the founders. So that will keep you in check. And the board ensures that you keep adequate controls to protect the organization from such incidents. Yes.
Thank you for the addition and the suggestion. It was quite useful for us and will be useful for me too. Thank you for the insights. I request you to please share your email ID in the chat box so that if anyone wants to reach out to you, they can straight away drop a mail. Thanks. So, now moving ahead, I would like to invite Ms. Parnil Singh from Boston Consulting Group to commence her speech and share her insights with all of us. Welcome, Parnil ji.
Hello, hi. I hope I'm audible. Perfect. Okay. Great. So I think, as you said, I'm a consultant, so I do have some slides because I don't know how to have a conversation without it. So I hope it's okay if I can just project some broad slides.
Sure, sure, sure. You can just share it.
Just give me 1 second. Okay. Is my screen visible?
Uh, Not as of now. I can just see a peek. Yeah, now it's visible.
Visible?
Clearly
Okay,
visible.
perfect. Okay, so first of all, thank you so much. Really thankful for being invited. I just want to start with the fact that, actually, let me go to my introduction. So I am Parnil. I am a management consultant from Boston Consulting Group. I am an engineer and I did my MBA. So just a disclaimer. So I think my basically conversation is not going to be very heavy on risk management. I think I'm going to speak, I think I want to speak on the broader thing about entrepreneurial mindset and not just entrepreneurship. And basically what I have learned in my professional journey of consulting. I also have been a part of like some of the great educational institutes of this country. So I also have some reflections on, what I think could be improved when it comes to fostering this mindset in students, because I do believe there are some gaps. However, I think there are some great initiatives which are being taken, which was actually discussed in one of the previous talks also. So just getting started. So basically, and this is something which happened to me also when I was a student. And I think for most of the time when I was working also. So whenever anything related to entrepreneurship comes to, whenever I think about the word, I used to think it's a very distant thing, right? I used to think of all these people like Elon Musk or Mark Zuckerberg, something that, for me, it was basically that you had to basically set up a multi-million-dollar or billion-dollar business. But I think when it comes to entrepreneurship, and the more I have been seeing the new age students, the way the startup explosion has happened, and even the way my professional journey or the people around me are evolving, I think it is also about the entrepreneurial mindset, right? I don't think everybody needs to it's not necessary that you need to have a very big business, but I think you need to develop that muscle, and each and every one of us needs to have it. I mean, just to basically talk about the mindset, essentially, right? So I think these are some of the words which I can throw around. But just to put some more essentially reflection, or put some more essence to that, I think most of the times, or basically most of us, the way we grow or the background from which we have come, I think what we were taught is basically that you study well, you get good grades, you go to good colleges, you get good jobs, good paying, and that would be it, right? But I think in today's world where things are evolving so rapidly, that is just not going to be sufficient, right? And just basically coming, just switching slides. I think if we see like our previous generation, or even if we see a few years back, right? Just getting a good job was actually good enough, right? I mean, we have seen the previous generation being in the same job for like 20, 30 years, right? It was good enough. It was very stable. It was safe. But today, everything is changing very rapidly, right? I mean, if you see the news, you can see how quickly technological advances are increasing. I mean, today is like somebody who's like 12-year-olds today, he basically be working on a job which doesn't exist, right? And we're already seeing so many jobs which are going to get obsolete because of all the AI buzz which is happening. Just to recount an example from my own job. So there was this task basically where I had to take around 30, 40 companies, essentially, take some information from them, process it, and basically apply it to the client, which we were advising. 2 years back, I would get at least half day of time to solve this, right? And I would still be appreciated. But when I did this 2 months back, our company has ChatGPT, right? So I was expected to do everything in within an hour. And even after that, the output was judged. It was like basically, half the work is being done by ChatGPT. So what is something which you bring? So I think we need to go beyond the general things, like basically the normal things which were expected and which were considered okay, let's say yesterday, they are not going to be good enough, right? Which brings me to some of these broad points which basically each and every one of us need to have. Like I don't have right now, like I'm not running a business right now, right? But I know that even to succeed in my job, I need to have a very strong entrepreneurial mindset, right? I think some of the things which basically entail this are, like, one thing is you need to be a self starter and initiative taker. And this is something which we need to really, which I want to emphasize, is because, again, right, if we see the way the system is structured, like basically there are things which, like, we essentially do, we read textbooks, we do well, we get great marks and we get appreciated, right? But that is not enough. I don't think right now, if you just wait to get instructions and work well on them, that is not enough. You need to basically take initiatives. You need to be curious and you need to identify the problems around you and see what problems I can actually solve. You need to be resilient. You need to have that high risk appetite. And all of this is important because honestly, the normal tasks which we could do is something which AI anyway is going to do. So hence, I think cultivating this mindset is very important at all stages of life, whether you are a student, whether whether you're in school, whether you are in college, whether you're working, that this becomes very critical. Um, yeah, I think this was a quote which I had seen, and this was basically said by an educator. But essentially, that is what is happening. I mean, and of course, I know this says jobs. It could be also that, we basically need to teach students or people to build companies. But the way things are changing, I mean, you need to actually work on problems which don't exist. I mean, again, coming back to the ChatGPT example, right? 2 years back, I was happily using Google. Now, everything I do is using ChatGPT. And I think, how did I used to even operate 1 year back? I think that is where pioneering comes, right? I mean, you actually identify things which basically don't exist right now, right? But then they become so critical that essentially everybody starts using them. I think, coming to the next question, that how do we become more entrepreneurial? And I think, I'm sure that some of you might already be maybe entrepreneurs. You would be working on your ideas, which is great. But I think this is for people who, let's say, might be working on jobs, or let's say who want to, let's say, do a job. But then again, coming back to the point that all of us need to work towards this step, right? And basically develop this muscle. I think some of the points, I'll come back to this quote, but I think some of the points which we can do individually, right? And I know, again, it is difficult to manage it, let's say, with a day-to-day job. But I think some of the things which you can do, and I have basically split it into two parts. One is what we as individuals can do to develop that muscle. And then basically what I have in my consulting journey, see what basically, like, what are the successful traits when it comes to, let's say, startups or founders, or even successful executives at top positions, right? I think, and please take these tips with a pinch of salt, but I think this is essentially that you need to do something outside your regular job, or basically, because a lot of times on a lot of jobs are essentially what you are being told what to do, right? And if you can, in your job also, if you can go out and work on some initiatives on your own, if your job gives you that, that is great, right? But if it doesn't, you need to work on building that entrepreneurial muscle on yourself, right? Because jobs can be very fickle, right? You already see so many talks, right, that Microsoft, Google layoffs. So I think you need to work on yourself. You need to work on creating that basically muscle inside you, right? So I think these are some of the tips, and some of these things I have been trying. I have seen my colleagues trying, but I think just try to do something on your own, again, outside your regular work, right? It could be something like, you basically take part maybe in a competition. You can start your own website or a blog. You can basically take a course and practically apply it to something. And remember, it doesn't need to have a great ROI, right? Like, don't think that I'll create something and then I need to become very popular. I think the essence is that it will teach you a lot of things. It will teach you what does it take to build something. I think building something and creating something is very different from your regular work, which is something you need to develop yourself. And that is why try to do something outside your work. Again, it could be, try to identify problems. I think that is one thing which some great people do, right? Just see that, okay, like, just to give you an example, and I was reading this somewhere, right? Right now in India, and I doubt probably in the world also, there is no end-to-end health stack, right? It's broken. I mean, if you fall sick, you go to the, like, let's say most of the healthcare right now is basically none of it is preventive, right? So if there was a end-to-end health stack, something like, okay, let's personalized health service that, okay, I'll take your blood test, I will recommend you supplementation, I will recommend you to the right doctor, I will recommend tailorized or personalized food so that you don't, let's say, get sick. So I think even identifying those problems that, if I get a chance, I want to work on these 4 or 5 big problems, that also helps you to, get towards that mindset. And I think coming to this, because again, since I've spent a good 4 or 5 years in consulting, and in my experience, I have worked a lot with corporations mostly, but I've also worked with startups, right? And these are some of the things which I have seen in day to day, like what makes, let's say, a successful executor or a successful founder, let's say, stand out from others, right? I think the first point is find your moat, right? And it doesn't need to be, I mean, of course, it applies to if you have a startup, but I think whatever you are working on, right? You need to identify why are you doing it and for what you are doing it, right? Second, I think risk appetite. And this is something which I think a lot of us might struggle with. I have personally struggled with, but I think having that high risk appetite is essential. I mean, because at the end of the day, 99% of startups will fail, right? But that doesn't mean it's a full failure. I mean, you're still going to learn something out of it, right? So I think that is there. Team is everything. I mean, there has to be a very high emphasis on hiring the right people, especially the initial people. One of my close friends was actually hired as a full-time employee, but then she basically kind of got promoted to the co-founder, and she exited, like, she had a very successful exit. But I think she knew, she had a lot of knowledge, and she was, like, deeply invested in the cause. So I think team is very everything. Relationships go a long way. I think, again, whether you are in job, whether you have a startup, I think have those relationships, right? You should have those, you should have a few people who you can just pick up the phone and call. That will help you, like, that will really help you. I think humility and empathy is again very important, because things again are very changing very fast. You might need to pivot a lot of times. This is something which was again reflected in one of the earlier talks also today. Be very clear with communication, and this communication applies everywhere, right? Whether it's with your customers, whether it's with your employees. And finally, like, be invested in your company in terms of, like, be invested in your employees. A lot of times, it's not the greatest thing, but a lot of times we see companies who are running out of after profits, but then the team culture really goes for a toss. So if you invest in the right way, then your company or your team will endure for a long time. So I think those are my learnings from consulting. I think essentially I would basically just like to leave with this quote that, and again, I mean, it's just not that we need everybody to create a company, let's say, but I think the more important thing is that we need a lot more entrepreneurial people, and we need them in all aspects of life. So I think we need to develop that muscle. I think that is something which we need to actively do. I think I missed something, but just one last thing before I close this. I do think when it comes to systemic changes, just reflecting back again quickly on my colleges, again, when it comes to, like, if I talk about IIT and IIM, I think we had great professors. I think we had the peer-to-peer learning was great, but there needs to be still more push when it comes to the kind of learning and curriculum, right? Because there is still a lot of emphasis on getting that textbook knowledge and reproducing it on the exams. So there are actually some schools in India and outside India which are coming up, which are doing all this innovative educational models. The first one, Masters Union, actually I have interacted very closely with them. This is basically located in Gurgaon. And the common theme across some of these colleges is essentially that it is not a traditional exam curriculum, right? It is basically that you get points if you, let's say, if you open your YouTube channel, if you essentially, there's a startup challenge. If you have a startup and if it generates revenue, then you get marks. So this also points to the fact that one, yes, there are some systemic changes happening. And second, how critical it is for all of us to jump on this bandwagon. And, we can't really avoid this topic and entrepreneurship at all, because again, the world is changing and everybody is recognizing it, including institutions. So I think that's how I would like to conclude it. Thank you again for having me here, and happy to take any questions.
Sure. Just a small question, Parnal, from my end personally. Considering that you have been a consultant for approximately 6 years with BCG, and you might have already worked with well-established businesses, right? Not merely startups. My basic question is, what is the very common mistake that you have noticed in your 6 years of experience that big businesses make from an entrepreneurial point of view? What is that mistake which you would advise our young entrepreneurs to avoid in their journey?
I think that one mistake which I've seen, which is most common, and I think it can be easily avoided in startups, is that the decision making is very slow and there is a lot of hierarchy, right? So ideas are not accepted well. So for example, if I am, let's say, and I can talk about an organization, let's say a PSU also, and there's someone I worked with them also. So basically, the thing is, let's say if I'm an employee and if I have a new idea, the idea will have to go through, let's say, 10 layers of people. By the time it reaches management, it's probably few months have passed. The idea is also gone. So, innovation is slow versus startups. I think what startups need to ensure is, one, have a great team, but don't have hierarchy and don't have random meetings. Like, cut the processes. I mean, it should be very open room sort of meeting. And this is something which I read about Netflix also, right? I mean, very open room discussion. Like, I can basically go to the CEO and just talk, which is something which is not there in big companies. There is a lot of hierarchy. You will be very hesitant to raise it to your boss without, let's say, you will have the concern of being probably scolded. So I think that is one thing which happens a lot.
Okay, so in-house discussion. Thank you for the suggestion, Parnal. It was great talking to you. If you could just share your email ID in the chat box, so that if any of our audience has any quiz, they can directly reach out to you.
Thank you.
Thank you. Sure. So now moving ahead, I would like to thank everyone for your amazing contributions to today's session. And thank you everyone for joining us too. I know 3 days of continuously sitting straight for 1.5 hours can be very hectic. Even my back pains. Although I'm a martial arts guy, so it's a common thing. And I hope that obviously everyone gained some knowledge from this conference and you'll be obviously implementing it in your own startups. So looking ahead, we're excited to announce actually that our next conference will be held in July on the topic of ethical dilemmas faced by entrepreneurs. Again, having a panel of 16 diverse experts from various countries, various regions, industries, organizations, and various designations and departments. So we hope to see you all there and engage into an insightful discussion. Until then, stay happy, keep dreaming, and continue to strive for excellence. And do subscribe to our YouTube channel and follow us on all our social media handles to stay connected with us. And participants, you are requested to kindly fill the certificate form within 30 minutes from now, which will be shared in the groups. So post 30 minutes, the form will be closed. So thank you everyone and have a great day ahead. Best of luck for your ventures.